Market News, Friday, June 27, 2026. Welcome to Market News. I'm your host. What a day. If you had 10 minutes this Friday, there are at least 3, maybe 4 completely different stories competing for your attention. We have a massive $60 billion deal reshaping the enterprise coding market, cloud computing going absolutely supernova across hedge fund portfolios, some geopolitical heat in the Strait of Hormuz, and all of this layered on top of a technical analysis scan that found a serious bearish lean across more than 10,000 traded symbols. So let's get into it. Let's start with the biggest story we can confirm from today's coverage. SpaceX is reportedly pursuing a $60 billion deal for the enterprise coding platform Cursor. That is a number that stops you in your tracks. 60 billion. And it's not happening in isolation. There's concurrent chatter around how many Starlink satellites SpaceX can launch this year, touching both SpaceX and NVIDIA on the infrastructure side. So you've got a company that has built its reputation on rocket launches and space dominance now moving aggressively into enterprise software and coding tools. The implications for the broader tech ecosystem are worth sitting with. How do you value a coding platform at $60 billion? And what does it say about the competitive landscape for development tools? NVIDIA keeps showing up in this story thread, across coding, across satellite infrastructure, across quantum computing, as if it's quietly positioned at the center of almost every AI-adjacent infrastructure story right now. That actually segues into the second major theme, and that is cloud computing. Hedge fund coverage is incredibly concentrated on the cloud leaders right now. Microsoft, Alphabet, Amazon, and Oracle are all being cited as best-in-class cloud stocks. We have headlines from InsiderMonkey breaking down why Google and Microsoft sit at the top of that list, why Amazon is in the conversation, and Jefferies maintaining a buy rating on Oracle. These aren't fringe names. These are the foundational pillars of the modern cloud. And it's not just the Big Four. Teradata is expanding Vantage Cloud partnerships as Vantage Cloud adoption picks up. Wix is integrating Harmony into Microsoft 365 Copilot Chat. And on the security side, Jack Henry and Google Cloud are expanding their Google Cloud AI security partnership. So you have the core cloud platform winners. Yes, that's still Microsoft, Google, Amazon, and Oracle. But you also have a rich ecosystem of companies riding those rails, building on them, partnering with them. The thesis right now seems to be, the cloud is the infrastructure, and there's enormous value to be found in the layers built on top of it. Now, let's go deeper into semiconductors and AI infrastructure, because the calls we're seeing here are nuanced. Goldman Sachs just initiated coverage on Intel, with AMD and NVIDIA also called out across multiple publications. Cisco is highlighted among the top 15 AI stocks for the NEXT Chinese letter, the next 10 years. That's significant. Cisco, a networking stalwart, being included in a 10-year AI stock roster. JP Morgan removed Arista Networks from its equity focus list, which is its own signal worth watching. And then we have Inflection being discussed as a quantum computing play, with NVIDIA referenced alongside it. There is also coverage suggesting that NVIDIA appears across multiple bullish theses, from retirement income strategies to being compared against rare earth stocks. The common thread is that AI infrastructure is no longer just about the chips themselves, it's about the entire stack, from networking to quantum to the software that runs on top. On the autonomous vehicles and EV side, Tesla Semi is getting attention. There is a California incentive structure that's in the news, a $60,000 incentive at play, and the headline context is that the listed retail price sits around $290,000 for the Tesla Semi. Rivian also gets bullish coverage, with one Motley Fool piece suggesting that buying Rivian today could set you up for life. And Amazon has partnered with Thundersoft on in-vehicle voice AI, which ties the EV story back into the AI story in a way that makes you realize how interconnected these sectors have become. Let's talk about some of the more unusual or cross-sector stories. Cathie Wood bought $11.5 million of coin, as reported by The Street. That's a material conviction bet on the crypto infrastructure space. And then over in cryptocurrency history, there is a debate reigniting around XRP's origins. Ripple's former CTO is claiming that the XRP concept predates Bitcoin. Whether you buy the origin story or not, it's generating conversation around XRP-USD and, by reference, BTC-USD. Elsewhere in entertainment and media, Starz Entertainment's stock is seeing fair value lifted after Q1 analyst target increases, with JPM referenced in the context. JP Morgan itself is undergoing a sweeping leadership shakeup. Jamie Dimon isn't leaving yet, but the reshuffle may signal who his potential successor could be. That kind of movement at America's largest bank always rattles around the financial sector. In consumer goods, Procter & Gamble revived its soap opera roots with an Albertsons micro-drama partnership. It sounds whimsical, but it's actually a fascinating case study in legacy consumer brands experimenting with new media formats. Hershey, on the other hand, is quietly redefining its U.S. playbook with new leadership and a pivot toward protein snacking. PepsiCo is in the frame alongside that story for comparison. Pfizer appeared in two seemingly contradictory headlines today. One was positive. Pfizer was dismissed from a generic drug price-fixing lawsuit. The other highlighted Pfizer as a dividend play, praised as a fantastic dividend stock for income investors. So you've got both legal tailwind and income-oriented bullish thesis converging on PFE. And then there's Accenture. Shares have plunged 50% this year, drawing serious investor scrutiny. A 50% drawdown like that commands attention. What happened? What's the outlook? These are the kind of questions that separate the value hunters from the panic sellers. One more story from the enterprise world before we get to OpenAI. Microsoft-backed OpenAI may wait until 2027 for its IPO. That's a timeline extension that could reshape the AI investment landscape heading into next year. If OpenAI delays its public debut, all that pent-up demand has to go somewhere in the meantime, and it likely flows to the incumbents, Microsoft, Alphabet, Amazon, Nvidia, that are already delivering AI products and revenue today. Now let's talk about the technical side. The notable market signals data for today scanned 10,680 symbols and generated 11,578 signals. The lean here was heavily bearish. You had 36 bearish signals to only 14 bullish ones. The top bullish readings were concentrated in microcap and warrant instruments, KTTA, RNWWW, TBLA, WGSWW, and WAC, all showing strong momentum up. The top bearish readings centered mainly on warrants and OTC names. BFLX and Dinku and GDEV was showing overbought territory, NIX was showing potential overextension, and KTTA also appearing with a potential overextension read alongside its strong momentum bullish signal. No widely followed large-cap signals stood out in this scan, which is itself notable. The bearishness is concentrated in the lower quality, higher volatility names, which is a pattern that some would read as a sign of risk-off behavior trickling down through the market rather than a fundamental capitulation at the large cap level. And then there are the stories that are interesting but not market-moving. Canada's Davies is available for a historic knockout clash. Array Digital Infrastr completed the sale of a Spectrum license to Verizon. TTW highlighted the top 100 luxury hotels in the world for 2026. Restaurant Brands International is being compared to McDonald's on revenue trends. And there's general market education content, pieces about passively managed index funds versus mutual funds, about Vanguard ETFs for retirement income, about Brookfield Renewable being framed as a compelling long-term hold. These aren't the headlines that move indices, but they are the kind of content that shapes how retail investors think about capital allocation over a 30-second or 60-second horizon. So where do we land as we go into the weekend? The biggest macro takeaway is that AI continues to be the through line across every single sector we just covered. From enterprise coding platforms to cloud computing to in-vehicle voice assistants to semiconductor analysis to quantum computing to AI security, it's everywhere. SpaceX's move into coding suggests that even the most unconventional players in the tech ecosystem see a path to monetizing AI-adjacent tools. Cloud leaders remain hedge fund favorites, and the ecosystem around them is broadening, not contracting. On the geopolitical side, the U.S. hitting Iran again after a new tanker attack in the Strait of Hormuz is a reminder that macro-level risks are still in play. That kind of headline can move energy prices, can move shipping rates, can move sentiment across the board. It doesn't show up in technical signals, but it absolutely shows up in risk premiums. And for those of you tracking the technical landscape, the heavy bearish lean across lower quality names, with the exceptions being a handful of micro-cap warrants showing momentum, suggests caution from the quant side. But again, it's important to read the composition correctly. This isn't broad-based large-cap weakness. It's warrant and micro-cap noise, which is a different animal entirely. That's it for today. We'll be back tomorrow with another edition of Market News. Stay curious, stay disciplined, and we'll see you then.